Right, it's Sunday, 14th of April, and I want to do a quick run over the major currency markets and the stock indexes. First up, I want to look at Euro US dollar. Now, you can see that over the last week or two, we have a very choppy rally. We have a rally of reasonable distance, but if we look at it, look at how many of these bars are overlapping, lots of wicks. It looks like it's going to go down, then it goes up, then it looks like it's going to go down, then it goes down and up, down. This is the very character of a counter trend rally. Now, if we zoom back out a little bit, since pretty much May 2018, so nearly a year, this market has been awful. Very few trending periods like this, lots and lots of chop. It's been an extended long-term trading range and a long-term trading range heading downwards. So we have two situations here. Situation one is that this market has found a bottom and is likely to continue rallying, but I am not trusting this rally over the last couple of weeks because of its choppy character and because we have volatility represented here by average true range percent at a historical low. You can see that this is the lowest volatility reading we've had since back here, and you can see back here this low volatility readings have a statistically outsized probability of leading to trending periods. And you can see it again here, this low volatility extreme led to this nice trending period here. So we have a market that has been so choppy and so awful and so hard to trade that no one's been interested in it forever, and just at the moment when you forget it, it's likely to kick off. Now, how would I trade this? I would wait for a break below here and get short. I would wait for a high probability sell setup, which we do not have yet. Now let's move on to some other markets. AUD USD, because I'm Australian. You can see after the flash crash we had here, we've been working off that volatility in a sideways movement. This has been the exact same thing, an awful sideways period. Very few edges. I would be standing aside from AUD USD this week unless you're an intraday trader. USD JPY is a little bit more interesting because you can see here we have this incredible big down move culminating in the flash crash. Now that flash crash started off some profit taking, which got a life of its own, and this rally started to have legs. But if I was a JPY bear, I'd be thinking this is just a leg up and we're going to get another leg down. Almost everyone would think, okay, this type of move can't be wiped out in one leg. We're probably going to have a second leg down. But that hasn't happened. You can see we started to get a second leg down and the bears got wiped out. So at this point, the bears are very, very weak. The bears might have thought they were going to get another leg down, but they didn't. The bears might have thought that they're going to get another leg down here, but they didn't. So at this point, the bears have been stopped out multiple times and are very weak. And at this point, the bears are thinking, oh, it's finally our time. We finally got this trend change. We're going to go all the way down to here. And it's just not happening for them. So we are at a situation where there will be a tremendous, and I mean tremendous amount of bearish stops right here. If we hit this point, those stops are going to trigger and this market is going to go gangbusters to the upside. And why is that going to happen? It's because when traders are trapped the wrong way, you get really high probability moves. So what causes panic selling, panic buying is people trapped in a trade that they don't want to be in and they have to get out. Okay, so last of all, let's look at the E-mini, the S&P 500 futures. Now you can see there's something very interesting on display here, is that the times when the market has been relatively easy trading have been these rising volatility periods. You can see here, you can see here, you can see here. And the times that the market has been, frankly, a choppy, annoying thing to trade, here in these decreasing volatility times. Now, there's something that statistically we know about decreasing volatility moves, is that decreasing volatility trending moves have a decreased probability of counter trend setups working. So you can see here, this sort of counter trend setup worked for a little minute and then got stopped out. This one here worked for a little minute and then got stopped out. And you're seeing the same situation here, but even stronger. Anything that looked like a reversal point has just been steamrolled. So the bears are very, very weak at this point. Now, what is likely to happen here? The bears have just got nothing. The bears are exhausted. The only thing that will bring an end to this move is not bears stepping in to push the price down. It's when every single bull is fully long invested. Now, we're gearing up for the great big battle of all-time highs here. If we break all-time highs, this market is probably going to retest a little and then explode to the upside. But if we are going to fall, it's got to happen soon, and you can see that the volatility is the lowest since we started to drop. So it could happen, but the bears are so weak that the bears aren't going to be able to push anything. It's really all down to bulls being exhausted and bulls being fully invested if this market's going to reverse. This would not be a betting proposition for me right now. And if you look at the monthly chart, you can get a better idea of it. This looked certain to have been a stopping point right here. This could still be a stopping point, but it has to really turn around right here, right now. If it doesn't turn around right here, right now, and we get above here, we're going to have a situation exactly like here, where it looked like it was going to fail, got above, retested a little bit, and off to the races. So those are the things I'm watching for this week. Come to scottphillipstrading.com and get some more.